Hi, this is Matt Amberson, principal of ORATS, and today we're going to be looking at OptionVision. OptionVision is a graphics tool to look for opportunities in the option market. It is a product of joint venture between my firm ORATS and Acumen. Acumen does these visualization landscapes. So we'll pull up OptionVision, and the launcher looks like this. It's divided into stocks, one building per stock, options, one building per option. And we will start at the top. We'll start relative volume and IV30 COD, implied volatility 30-day interpolated, change on the day. Click go, see what comes up. Alright, so we are looking at the sectors, and each building represents a stock: financial, metals, and mining. You could do quite a bit with this, twirl it, move it around. But what I like to do is, it looks like there's some activity going on in the technology sector, so you could right click on that and show only the technology sector. Spin that around. Let's see what's going on the other side here. We see many up on the day. Let's see what's going on down on the day. There's Cisco. There's some other stocks here, Tyco, SNE, but let's look at Cisco here. Let's right click on that and show again the relative volume and implied volatility change in the day for Cisco itself. So what we'll be seeing there is just Cisco Options. So what you notice right away is a lot of the well, first of all, let's just explain what we're looking at. 11/17, that's an expiration. 12/22 is the DECE expiration, January. The way the relative volume works on an option level is we take a 20-day average of the option volume in a particular stock, divide that by the number of options tradable, so number of options that are generally within 1 delta and 99 delta, and then so we get an average tradable volume for each option, and then we divide the actual amount of volume for that option by that expected or relative volume. That way we could keep these graphs consistent. So obviously Cisco trades more than a lot of other companies, but since it's a relative volume, we could see Cisco in terms of where these options are trading versus where they normally trade. So for example, you could click on the Nov 18 call, and it is trading 5 times what it normally trades. So the volume today is 5 times the 20-day average volume divided by the number of strikes. And then you could see some other options. The 18 trading 1.5 times, 2.5 times for the 18 puts. So you'll also see that the volatility is down pretty dramatically today. 67% is a dramatic move. That's why it's in dark green. And you might wonder, well, what's going on in Cisco? Then you might want to pull up some outside information, news service, or we have the ORATS dashboard here that I can pull up for you and see get a better look at what's going on in Cisco right now. So let's try to size this a little bit better. So in Cisco today, you might notice that they had earnings 11/13 after the close. So today is the first day after earnings. Usually what happens in those days is the volatility gets pretty hit, and that's what's happening in Cisco. So let's take a look at that real quick in the dashboard. So the dashboard does show the same thing that OptionVision shows. This is the interpolated 30-day, and you can see it tumbling from over 42 down to where it is today, 22. So that's that 67% change down. And then you might say, well, where is this going to? Is 22 cheap or rich? There's some other things in the ORATS dashboard that could help you with that. As far as where it's been trading, a lot of these other lines are historical volatilities. This isn't about the dashboard today, but I wanted to get some extra information about what's going on in Cisco, and it looks like that's what's happening. It's coming down to kind of prior than earnings levels. And it looks like also that the December is coming down as well. So let's take a look at another view of Cisco. Let's look at the mid implied volatilities for this stock. So now we're seeing a graph of all of the options in Cisco, not just the ones with the relative volume. We're seeing them sorted by month again, but also we're seeing them where the height is the mid implied volatility. So you can start to see a little bit of a skew here that you would expect in option trading. But then you could also see that some are higher than others. These are pretty, there are only a few days left in the November expiration right now. So that they get off the skew a bit, but it looks like what I'm seeing here is that the December is quite low, even relative to the January, and how far down December is going. So you could tell quite quickly in Cisco what's going on. It looks like they're selling off the front months, buying some maybe some out of the money options in the out months, but this is showing you the level of the mid implied volatility at each strike. So the January 13, 17.5 call, mid volatility is 23, and it's down 12.9% today. That in relation to maybe an April 17 call that's just barely down, less than 1%, trading 27 as well. So that's a quick overview of the relative volume. Again, we started on looking at all stocks in all sectors. We drilled down to the technology sector. We looked at a couple stocks that were bucking the trend. Many of them were up today. We figured out that Cisco was one of the biggest ones down today. It's down because we looked on our outside research because of earnings, and then we drilled in on what options they're hitting today. It's the front month, specifically the December, and we were also able to look at where the December is trading in comparison to a lot of the other options in different months. So I hope you enjoy that, and if you have any questions, my email is matt@orats.com, and thank you very much.